Early years, the story before Canal. In May 1920, William R. Timmons married Eva McDonald, through whom the legacy of 5 generations began. His entrepreneurial spirit and dedication to establishing Greenville as a big city was evident when he became CEO of the Chamber of Commerce.
Granddad was part of the Chamber's 1924 acquaintance tours. Greenville businessmen would get on the train, actually, and go to cities in the Northeast and even Canada and tout how great Greenville was, and they tried to attract businesses to come to Greenville. He also led the fundraising efforts to build the Greenville Chamber of Commerce building that was completed in 1925. Today it's a prominent landmark in the city of Greenville.
About that time, he began a real estate and insurance agency named Central Agencies that later became Central Realty Corporation and the William R. Timmons Agency. 1939, a future for long-haul trucking insurance. As the Depression was ending and World War II was starting, the remnants of the Depression left the Southeast the poorest of the poor and made truckers the riverboat gamblers of the transportation industry. South Carolina, followed by North Carolina and Georgia, passed legislation demanding long-haul vehicles be properly insured.
If you think back in the 30s, there was no interstate system and the roads weren't very safe condition, and the equipment, the trucks, weren't really what they are today. And it was a pretty risky business, but the demand for trucks, for them to move goods to market, was ever increasing. And he saw an opportunity that he could solve the insurance needs for these truckers. He could create a special niche for his agency.
1940s, opportunity. By 1942, the William R. Timmons Agency was writing more insurance on truckers and commercial passenger vehicles than any other agency in the 3 states. However, insurers were struggling. 4 companies collapsed in an 8-year period, resulting in higher rates and wider restrictions. Timmons and his manager, T.J. Mims, diligently looked for danger signs and transferred clients to new carriers when existing ones collapsed. In the end, not one client went without coverage or paid extra premiums. Their discipline paid off and became a cornerstone of the Canal culture that persists to this day. By looking at casualty companies with an increasingly critical eye, they were convinced that insurance companies failed mostly due to mismanagement and not the degree of risk involved. Meanwhile, the First National Bank of Columbia incorporated Canal Insurance Company to insure autos financed by the bank. Then in December 1942, capitalizing on an opportunity to create a stable truck insurer, Timmons acquired the 3-year-old carrier for $17,500. Since car production resources were redirected to the war effort, the bank was happy to sell a non-performing asset. In 1945, Gordon Rogers was added to the management team, playing a significant role in developing a coast-to-coast network of independent agencies. Then in 1948, the business suffered a tragic loss when Timmons died in an automobile accident.
Generation above me, rallied around. My dad was a senior at Furman. He's a retired Army captain back from the war, and he left Furman early and came and served as secretary. He managed the investments and ran the real estate company. Later, maybe 1949, Uncle Charlie, who had graduated from Clemson but was working at Westinghouse up in Pittsburgh, he left Westinghouse and came back to Canal and served as the controller and treasurer.
No one could have imagined that this management team, comprised of 2 second-generation shareholders and Mims and Rogers, would lead the company for nearly 50 years into the late 90s. None ever retired from the company. Such stability and commitment is totally unique in the insurance industry and certainly a key element in Canal's phenomenal success. 1950s and 1960s, perseverance and building for the future. In 1953, business was starting to expand and Canal was becoming a true regional specialty carrier, acquiring licenses to do business in 9 southeastern states. In 1956, President Eisenhower signed a bill for the completion of an interstate highway system. Although it would take 35 years to complete, the road ahead for truckers and Canal was being paved.
So the contract that my dad got from Bill Timmons in 1957, early 57, was actually in his personal name, and I think it was 2 pages. Canal Insurance Company is the only insurance company that has been through it thick and thin over and over.
By 1958, the company was licensed in 27 states and the District of Columbia. In 1960, Canal was operating in 42 states, and the AM Best Company gave Canal an excellent rating for growth, sponsorship, and investments. Growth remained consistent up through 1968. Then, premiums fell 30% in 1969 and took several years to recover. This was only the second time in Canal's history that growth was interrupted. But the company remained profitable, increasing surplus consistently through the recessionary downturn. 1970s and 1980s, discipline and preparedness begin to pay big dividends. The economic climate of this entire period was exceptionally turbulent, presenting considerable challenges to the transportation marketplace.
There were difficult times, but there's always difficult times. And I think when I look back at that era, and you're talking about the rise in gas prices, which obviously affected the truckers to a large degree, the high interest rates that people had to contend with, it was certainly an obstacle. But as far as the Canal was concerned, Canal always seemed to have a vision that was focused.
In the midst of this turmoil, the highly disciplined management team that by this point had been together for well over 30 years seized the opportunity. Premiums tripled from 1969 to 1978. Then, following several flat years, quadrupled by the end of the 80s. Surplus grew every year but one. This laid the foundation for 2 decades of continuous underwriting profits from 1985 to 2006, a feat unsurpassed in the insurance industry.
Well, I came with Rollins in 1985, and at that time the industry was changing quite a bit. There was a capacity shortage, the standard markets were unwilling to write business, and that's created quite a bit of opportunity for Canal and for Rollins.
Canal had become the gold standard in the trucking insurance business. AM Best agreed, as Canal maintained an excellent rating throughout the period. In 1989, Canal was 50 years old when assets approached $250 million and a surplus of $100 million. 40 years of patient, disciplined, and committed leadership was paying off. 1990s, a new millennium approaches. As the millennium approached its close, the company navigated yet another tumultuous period. This time, the challenges were both internal and external. 3/4 of the management team that led Canal for nearly 50 years passed away while still on the job. The torch was passed to a completely new management team when Charles Timmons Jr. was elected president in 1998. Trucking insurance was an extremely difficult business to underwrite, as Department of Transportation regulations and a company's ability to monitor insureds were still more of an art than a science. Only true specialists wrote trucking business, especially in the small owner-operator segment where Canal had made its name.
The trucking industry, just like any other industry, has a lot of regulations, a lot of requirements, and I came from being an employee to becoming an employer and did not really know what all was involved. So I contacted one of my friends, Jeff Warwick, and Gene Horner, it was in the insurance business, and told him what I needed, and told him I had to have some VIN numbers for trucks and had to have insurance, which was a big deal. Unfortunately, they told me that not a lot of insurance companies were excited about startup companies. And so I kind of thought about it a little bit, and they did come back and said, we do have an insurance company called Canal, highly rated insurance company that's willing to give you a chance. And I said, well, great, I'll take it. And I've been with Canal ever since, going on 14 years, and to my best of my ability, I'm not going to change.
21st century, great opportunity, unprecedented challenge, recommitment. Canal brought its distinctive business model, tested over 50 years, into the new century. A key element of that model was to take full advantage of competitor withdrawals from the transportation market. 1999 to 2004 was such a period during which premiums tripled to a stunning $530 million. Assets exceeded $1 billion and surplus approached $500 million. Years of steady, disciplined, and at times highly opportunistic management positioned Canal with the wherewithal to capitalize on a tight insurance market for truckers, particularly as the early decade economic boom led to dramatic expansion of the small owner-operator segment. During this remarkable growth spurt, the world around Canal was fundamentally changing. The commercial auto insurance industry began to embrace new technologies and sophisticated underwriting and pricing models. What had been an art practiced by a small number of specialty insurers was rapidly becoming a science. Canal began to invest in a new technology-enabled business model, but events were moving with unprecedented speed. The transportation industry itself was being transformed by government regulation and public access to safety information.
Sophisticated competition entered the transportation insurance sector in 2006. Then $4 a gallon gasoline plus a financial meltdown occurred in 2008. All of this constituted a perfect storm for Canal Insurance Company. Business failures in the transportation space skyrocketed, and motor carriers that survived had more options for insurance than ever before. Consequently, insurance rates plummeted, despite the fact that Canal's premiums shrunk $300 million to $190 million. Management hewed to the company's decades-long price discipline, or the underwriting losses that unavoidably ensued would have been far worse. Canal's long-established conservative investment philosophy served the company very, very well, producing solid returns during a period when many insurance companies suffered capital losses. So consequently, surplus continued to grow even through all this turmoil.
At the family council meeting, we decided that it would be the right thing for Canal if we had family board members as well as a majority of independent board members. The impact of having the independent directors with their diverse backgrounds and geographic orientations, and especially their commitment to Canal, has exceeded our expectations.
The company has done a whole lot over the last 2 or 3 years to portray itself as a real leader in innovation in the area of trucking insurance.
In the present day, history is repeating itself. Although the transportation market is highly competitive, many companies are withdrawing or collapsing. 75 years of business discipline and customer commitment make Canal one of very few companies agents expect to weather this storm and continue serving the motor carrier industry for many years to come.
The most important thing about today's Canal Insurance Company is not the fact that we're making heavy investments in our platform, or now that we're a national specialty company, the fact that we're bringing people from all over the country to Greenville, South Carolina. That's just what good companies do. The most distinctive thing about today's Canal is its ownership that has risen to the occasion at times of stress for the company repeatedly over the years, and has created an environment in which management naturally acts with the commitment of owners. That's the spirit that built Canal Insurance Company and energizes it to this day.
The leadership and shareholders will continue to navigate the risks of the road in the spirit of William R. Timmons' commitment and legacy, both now and into the future.